Before we bring in our guest today, I want to speak about a few updates to keep in mind for business owners as we head into 2024. There's a lot going on in the world, as we know, and it can be hard to keep up when there's call outs that you may or may not have been aware of as it relates to your business. It was actually a funny situation that I was watching a short episode of it wasn't a series, but a show that I was watching that gave some call outs to the subjects that we're speaking about today. And it was a true revelation that as entrepreneurs, we really have to be cognizant of all aspects of how changes in government and the world trickle in and affect our business in a huge way. So today, I want to speak about 3 areas that are a need to know for small businesses in 2024. The first being the Corporate Transparency Act. So, while things in the country, specifically in the USA, have been haywire, there have been a few laws passed that may have been under the radar for some. The Corporate Transparency Act is one. And this was actually passed in 2021 in the height of that pandemic we all know of. And the premise in a nutshell is to help catch those fraudulent businesses that have ill-gotten gains through shell companies or other ownerships. I'm not sure how many businesses were caught doing stuff to lead us to having this particular act. However, the government feels that this is a problem and we're thoughtful in passing a bipartisan act ruling against this negative activity. Bless their hearts. So I don't mind sifting through those that may make it hard for the rest of those businesses that are trying to make a way and to do something with their business and that follow the rules. But I do have an issue with changes now law that everyone may not be privy to those important call outs. I also have an issue when we provide a lot of sensitive details as it is to register for a lot of these businesses. So why are things slipping through where there's no additional stringent hassles that involves the government yet again? I'm talking specifically for those businesses that are making minimal and still assessing their ducks in a row. Okay, so this particular act, which is the Corporate Transparency Act, is really a huge thing to know because you have to file these details by January 1st of 2024. And it depends on when your business was formed. Okay, so there's a few call outs to that. However, you can file however, when you go onto the website, it seems like they're still trying to get their ducks in a row because it's not necessarily available for you to like go in and provide the information that they're asking, yet it's due for you to file by January 1st of the new year. So it's a little weird with that. You will need to report details about the business and details about the beneficial owners of the business. So things like your business legal name, your DBA, your address, your jurisdiction, your TIN number, who is the owner, which is your beneficial owner, the date of birth, your residential address, your driver's license or passport. So some of these things are things that we give anyway if you have an LLC or if you have an S Corp or a Corp. Some of these things are kind of no-brainer, but this is what they're asking. Now, the businesses, there are some businesses that are exempt from this whole Transparency Act, which that's even questionable, but we're not going to go into that on this episode. But like banks, credit unions, accounting firms, investment businesses, they avoid from filing. Blank, blank. Okay. So if you would like more details, because I think it is something important to take a look at, even though this particular website, some of the information is redundant, but you would go to www.fincin.gov, which is the Financial Crime Enforcement Network. So, as I said, a lot of the details are redundant, but you may want to review this further with your tax accountant. Okay, so next up is the SBA Community Advantage Lenders. So in April of this year, the SBA made some changes as it affects rules and revisions to loan regulations. So some of the takeaways were there's a new lending criteria that should help small businesses qualify for SBA loans. The community advantage lenders can permanently expand serving minority communities. So maybe there were communities or whatever in place where it was harder for certain groups to get a lot of these SBA loans. So now they're expanding the reach, if you will. Also, lenders will save time on loan documentation, providing a more efficient path to approving SBA loans. So, new allowances to provide SBA loans to, again, underserved businesses that may or may not have qualified for an SBA loan. This new advantage also qualifies nonprofits, those that may need lending that would qualify for those would include startups, women's small businesses, and veteran small businesses. And lastly, changing the SBA rules. Okay, the new SBA rules is really meant to boost underserved communities that traditionally get denied for credit based on their current qualifications. So as mentioned prior, this is supposed to help those communities and those businesses out, allegedly. It's expanding the number of lenders who can process an SBA loan, because there were a little red tape when it comes to getting SBA loans. So this is supposed to help lessen some of that by bringing other lenders to the table involved, maybe as a third party or something to that effect. Helping more businesses qualify under less restrictive credit criteria, and streamlining loan applications to serve lenders and small businesses better. So here we have some of the new rules and updates in a nutshell. Maybe you knew about it, maybe you didn't. I know for me, I didn't know about this. So these are things to know, as the new year, as we roll into the new year. So part of today's conversation, we're very honored and happy to have Marie Sutton okay, to come on board and to give us some tips, because an episode with tips is like a very worthy thing, so that way we can get our mind right to make sure these businesses do what they do. Okay. So I wanted to share a little bit about Marie. And there she is. Um, so
Hello.
hello. So Marie Sutton is a tax professional and a financial educator based out of Houston, Texas. Her passion is educating individuals and small business owners on their financial well-being, so that we can make smarter financial decisions, therefore allowing us to build generational wealth. And that is what we want. That is the whole premise of Black Women Bank. And we are very honored to have you, Marie. And the stage is definitely yours.
Hi, Yolanda. Thank you so much for the invite. I am really excited to be here to help provide some important tips for small business owners to know before heading into 2024. So, with that being said, I would love to start off with providing some two tips that small business owners should know before the end of 2023. My first tip is all about getting your bookkeeping in order before the end of 2023. This is crucial because bookkeeping is the foundation of accurate tax filing. My strong recommendation is for small business owners who might be behind on their bookkeeping or those who don't have an accurate bookkeeping system in place to prioritize getting it updated and started if you don't have one started. The reason behind this is twofold. Firstly, accurate bookkeeping minimizes the chances of triggering a tax audit, and we all want to avoid tax audits, right? We all know that the IRS has increased its efforts recently in this regard by hiring even more agents. So having clean and accurate financial records is your first line of defense. Secondly, procrastinating into the last minute can lead to late filings and potential penalties, and we want to avoid those at all costs if we can. Your tax professional may not offer bookkeeping services or may charge brush fees and additional cleanup fees accordingly, and if they have to manage this during the busy season, which is tax season. And in some cases, they may even have to turn you down as a client altogether if they cannot offer those bookkeeping services to you and refer you to someone else. All of these scenarios can result in avoidable and costly expenses, which can be easily prevented by just addressing your bookkeeping needs now before tax season is here. The second tip, my second tip for small business owners is also very important. This second tip revolves around tax planning and strategies, particularly because businesses that have seen their profits increase, potentially placing them in a higher tax bracket compared to previous years, will allow you or have you in a position to where you would benefit from tax planning. So if your business has become more profitable in 2023, it's even more crucial to sit down with a tax advisor and create a tax strategy plan. This plan will allow you to make legal adjustments within the current year to offset your tax liability, which is what you could potentially owe in tax and your taxes, as well as any fines for any late penalties or anything like that. Doing this allows you to have significant benefits. So it's essential to understand that tax avoidance is legal while tax evasion is not. And by having a tax strategy plan implemented, you're just practicing tax avoidance, which is completely legal. Tax planning, it's important to understand that tax planning is done throughout the year, right, before filing a tax return. It's not something that you do in tax season itself. So once tax season hits, it's often too late to implement strategies effectively. That's why it's important to start working on a tax strategy now. So my next three tips are going to be something that is very important for all business owners to know going into 2024. I am going to touch on the Corporate Transparency Act that you talked about, Yolanda. So I'm happy to provide some additional clarification because right now, because they are still getting things set up for 2024, there's a lot of information and a lot of new information coming out about just what is expected of business owners. So I am happy to provide some additional clarity on this topic for your listeners. So tip number one for going into 2024 that you should be aware of is what Yolanda has already touched on, which is the Corporate Transparency Act. But you may also hear it listed or talked about as the Beneficial Owner Information Request, which is BOI for short, right? So the Beneficial Owner Request Information is something that was enacted to go into effect for 2024 onward. So in 2024, businesses will face a significant new requirement, which is called the Beneficial Owner Request Act. So this again is referred to as BOI. This requirement mandates that companies in the United States report information about their beneficial owners. So the beneficial owners is anyone that ultimately owns or controls the company, right? And this is reported to the Financial Crimes Enforcement Network, which is in short form known as FinCEN. I would suggest that you guys visit their website, which is www.fincen, which is spelled FINCEN.gov, to get even more information to understand what's expected of you. So while this is expected to go into effect January 1st, and we are required to file January 1st, 2024, reports will be accepted and companies registered before the date. So starting on January 1st, 2024, reports will be accepted and companies created or registered before that date have up until January the 1st of 2025 to file their initial BOI report. So I'm just going to break this down and make it a little bit more clear. If you are a company that registered your business in 2023 and before, then technically you have up until January the 1st of 2025 to get this filed, right? So initially you have between January the 1st of 2024 till January the 1st of 2025 to get this beneficial owner information report submitted. Companies registered or created after January 1st of 2024 will only have 30 days after notice of their company's creation or registration to file. I'm going to repeat that. Companies that are registered in the new year of 2024 and beyond will only have 30 days to get their company's BOI report submitted. So if you started a company on January 1st of 2024, 30 days from the 1st of January is allotted to get your company's information report filed. Okay, so the information that needs to be reported will include every trade name, complete U.S. address of the owners and business owners, and physical address of the owners, date of birth, some form of identification will be required. And this will all be done electronically. So right now, if you were to go to FinCEN's website, they don't actually have a link for you to click on to get this started. They will not be accepting anything until January the 1st of 2024. So if you go there now, you won't see a link, but come January the 1st of 2024, you will be able to electronically file this through a secure filing system, which won't be available until the actual first of the year of 2024. So there's still some things being updated on their website, and things will likely be added to it. So I would just say refer back to their website to keep updated on any changes or news surrounding this new request, okay? It's important to note that there are penalties, you guys, for not filing on time. So if you can get this done as quickly as you can, don't wait until the last minute because those fees are hefty, okay? I'm talking up to $500 a day for not filing, up to $10,000 for late reports. Okay, that's not something that myself or anyone I know wants to have to pay. So it's best to just get that submitted in a timely manner. However, as Yolanda did point out, there are some business entities that are exempt. So refer to the website, FinCEN's website, for further details to know if your business is exempt. Also, I want to let you guys know that typically, if you use a registered agent to help set up your business or incorporate your business, they can help you. As we get further along in this request, more tax professionals like myself may offer this as a service to get this filed on your behalf for you. You would just want to ask the tax professionals that you're using if they will or if they do provide this as a service. But as of now, it is ultimately your responsibility as a small business owner that owns or runs a company to get this filed. Um, and your registered agent can also assist with this since they're your registered agent. All right. And keeping on with our second tip that business owners should know for 2024, this is a really good tip. I'm excited about this one, especially for us small business owners who building wealth is something that I am very I love to do. So I love to educate people on how they can actually build wealth by doing things in their business to set their kids up or their future kids up for success, right? So this one is about the key change in regards to retirement account contribution limits. As a whole, retirement account contribution limits have increased, not just for the self-employed retirement accounts, but overall as even an IRA account that you may have or a 401k account through your employer. Those limits have increased. This is the government's way of trying to help us combat inflation to keep up. So this is really good for us that are building wealth for our kids, our future kids, and grandchildren down the line. So what this means in regards to retirement account contribution limit is that you can contribute more tax-free money towards your retirement and wealth building, right? So as a business owner, I would suggest or I would consider opening up what is called a simplified employee pension IRA. It is also known as a SEP IRA, which is designed for small business owners, or self-employed individuals, which is also considered independent contractors, to utilize. It's important to understand that anything you contribute to a SEP IRA account are tax deductible, right? So this means you can write off this expense on your taxes to lower your tax liability. Contributions are tax deductible and investments grow tax deferred until retirement. That's when you would be taxed on the income that you take out of that SEP IRA account, right? So you only tax when you take out of the account, but you're not taxed making any kind of contributions, and they are tax deductible. So here's a key difference between 2023's contribution limit. So as of now, for 2023, you can put away as much as $66,000 into a SEP IRA account. That's a very generous amount of money that you can actually put into an account for something that's going to benefit you later down the line. The difference between that amount and for the amount for contribution in 2024 is it increases from 66,000 to 69,000 in 2024. Okay, so that is a very generous difference in the amount that you can contribute to this type of account. But the max is going to be 66,000 for this current year, 2023, and the max will be 69,000 in 2024. And if you're wondering where you can set up this account, you can easily set this account up with most brokers like Fidelity, Charles Schwab, JP Morgan, and others. Just do your due diligence on the requirements and the terms and compare and make your decision from there. Alrighty. Any questions, Yolanda?
This was phenomenal. Okay, because I have a couple of questions for you. Um,
Okay. And I do
again,
just
as
have one last tip.
okay, go ahead.
Okay. My last tip, you guys, and I will turn this back over to Miss Yolanda. My last tip is filing quarterly taxes. So a lot of business owners or new business owners may not be aware that they are required to file quarterly taxes throughout the year, especially if you owe or plan to owe more than $1,000 to the IRS, right? So filing quarterly taxes is crucial for businesses to manage their tax obligations more effectively So instead of waiting until the end of the year to make a lump sum payment to the IRS for their tax liability, you can break that up into smaller chunks and pay them quarterly. By paying estimated quarterly taxes, you can spread the financial burden across the year, reducing the risk of facing a significant lump sum at the end of the year. This also, this is very important to understand, it also prevents you from owing any kind of late penalties or underpayment penalties. Both of those penalties are what the IRS charges you if you fail to make those quarterly tax payments. Because understand that while we may expect it, some of us may get a refund back from the IRS. That's money that we overpaid throughout the year that we actually get back, but we can't charge them interest fees. But they will charge you their interest fees for not paying them on time. So this just helps us to avoid any costly penalties and underpayment fees just by making a quarterly payment throughout the year. Especially if you expect, I'm going to reiterate, if you expect to owe more than $1,000 at tax time. This proactive approach to tax management can save you from unnecessary financial stress and penalties down the road. Just consult with your tax advisor, your tax professional to see what best works for you and if it's required for you. And with that being said, I will turn it back over to Yolanda for any questions.
Thank you, Marie. As I mentioned, this was very educational for me, as I'm sure it will be for the listeners as well. So I have a couple of questions for you.
Absolutely.
Now I know you said like there is a difference between tax season and tax planning. And I know a lot of us, including myself, I tend to wait until tax season, I guess, to okay, whatever's owed based on the business, based on private, with your personal finances, you know, that whole mixture, if it's a joint, if it's single, and all of that other kind of stuff. So, why is it important, which I think you did hit upon that, to actually have a plan in place as a small business?
Yes. So, as a small business owner, it's important because your obligations as a business owner are very different from your obligations as an individual taxpayer. Um, so, if you expect, I would say look at what your last year's tax situation was like. Did you owe or did you get a refund? All right, that would be one of the questions that I would say business owners should look at because then you'll know if you can expect to either owe what you initially paid last year or if the business has grown, then you can say, hey, well, I know that I probably am going to expect to pay more in taxes this year because I have more profit. So it's essential to sit down with whoever prepares your taxes, a tax professional, to kind of to help gauge what your expectations going into the new year is. What I do is if I know I do bookkeeping, so I'm already with most of my business clients, I'm already knowing if their tax situation is going to be different. And me, I help them stay compliant. So I'm like, hey, send out a friendly email and be like, hey, you might want to come sit down with me to talk about expectations going into 2024 because there has been an increase in growth in your business. So I kind of do that for my clients. But if you don't have someone that is like a tax advisor that you sit down with, I would suggest maybe being proactive and reaching out and asking if you can have a sit down. So everybody's tax situation is different. No one's is identical. It really just depends on has your business grown? Is there a difference in the amount of revenue that you've generated? Has your tax situation on as far as being married or divorced or single or maybe you had a baby? All of that are things that can affect your tax situation. So it's just important to really just sit down with a tax professional to understand what your obligations are.
Okay,
I hope that
great.
answers your question.
It did. So, okay, let's go back to the Corporate Transparency Act. Okay, now, though the filing is January 1st of 2024, like I said, when I went on to the website, there was just a whole lot of repeating the same thing over. But I don't think I saw, is this something businesses will have to do every year? Or is this like a one shot deal?
So, great question. So if you intend on having one business for forever, you're only going to be required to file this report once. But let's say you want to start another business in the future, then you're now going to be required to submit this report for that business and any subsequent businesses that come after. So that's a key thing. You only initially need to file one report for every business that you own. If that's one business, then you'll only do this once. And if that's multiple businesses, you'll do that once per each business. Um, and any business that you decide to open up after that.
Right. So, okay, let me get a little deep. This will be the last question. Do you find that this is repetitive? I know the government does what the government does, but just as I mentioned prior, don't like the information that they're requesting isn't this information that we tend to give anyway when starting a new business? Like we have to give, I guess, social security number, even though they're not asking for that specifically, but those type of documents like your driver's license or if you have a passport, like again, I just feel like it's redundant. Like, don't
Okay.
they have like when they give you the EIN number or your TIN number or what have you, like it's confusing.
I understand. Yes, ma'am. And I definitely understand where you're coming from because, in a sense, this is information that the government already knows. But here's what I would say here's a key difference in understanding why it's being required because, for one, they're trying to crack down on those that may be operating fraudulent businesses or doing illegal activities. So if you're already doing what you're supposed to do, it's really not going to cause a difference for you. What they're trying to do is get those that may be operating fraudulently activities or opening up shell companies to get them basically find them.
Mm-hmm.
So there is a such thing as anonymous LLCs. There are some states, I want to say about 5 different states in the US, that you can actually open up an LLC anonymously. So you're not, yes, that there is a such thing. So with that being said, there are ways for people to open up businesses that may not have the best intentions, and for ill reasons. So that is just another way for them to be able to understand who opened the business because by this request, they would have to submit that information, even if they open
Right.
it up initially anonymously in a state that allows you to do that.
Very interesting. Okay.
Yeah, very interesting.
I love it. Well, I don't love it, but you know what I'm saying. I love how you're explaining this to me because I'm sitting here. Okay, these are things that I need to know that I didn't know. So this is great.
Oh, absolutely. Yes,
So
ma'am.
Marie, do tell us where our listeners can learn more about you and about your services.
Absolutely. Um, so yes, I have a link tree. That's probably the easiest. I love link trees. You can just put all your links in
I
one
do
place.
too.
But for now, you can find me For now, you can find me online. My website is levelupacademy.godaddysites.com. That is my website. I am also on social media. I'm on LinkedIn. You can find me on LinkedIn at Level Up Tax and Bookkeeping Services. You can also find me on Instagram under Level Up Academy LLC. You can also find me on Facebook at Level Up Academy. Those are my main social media accounts for my business. Again, I will see if Yolanda can take my link tree to put it in if you guys want a quick, easier way to find me in one spot. Um, but yes, that's where you can find me. I will be happy to assist you if you ever need any of my services. I do provide tax prep for business owners, bookkeeping, business funding, and business education credit. I'm sorry, business credit education, and more things you can find on our website.
Wonderful. So here you have it, ladies. There's a lot of things happening, but as business owners, as we mentioned before, we have to be in tune to carry on and keep up with the rules in place to keeping running a sustainable business. So this was a great show. We look forward to the next time. We leave you with another episode of Black Women Bank. Cheers.
Bye, you guys.